Good morning, ladies and gentlemen. Welcome to today's business forum. We will be starting off our program in the next 5 minutes to allow more of our customers to log in. I see we have about 50 participants and we're expecting about 500. So please, let's give it another 5 minutes, then we kick off our program. Thank you. Distinguished customers, honorable guests, my colleagues at NCBA, ladies and gentlemen, I welcome you for this second forum this year, which is themed around positioning your business for growth. My name is Stephen Gakuya. I'm the head of business banking at NCBA. I want to take this opportunity to thank each one of you for logging on in this morning. And this is part of our capacity building for our business customers. We have organized this session today as a follow-up to our taxation webinar that we held in March. And the topics were carefully selected following the feedback that you as our customers gave us on that day. It is therefore my hope that at the end of this session today, you will be able to identify some of the risks that your businesses face and how to mitigate those risks, because we are not able to ultimately eliminate risks. We mitigate risks so that we can be able to continue running our businesses. We should be able to understand the elements of good governance, why good governance is important in the management of our businesses, for us to be able to build solid organizations that would outlive our generations. And most importantly, is to manage, understand and learn how to manage your cash flows for better business planning, for your expansions, for your diversifications, and also where you need our support as a financial partner for us to be able to support your business growth. Today we are joined by two subject experts, and let me have the pleasure of introducing each one of them. But before I go to the experts, I want to introduce our host today, who is Tyrus Muthiga. Tyrus is our group director in charge of retail business banking. And he'll be our keynote speaker this morning on behalf of our group managing director, Mr. John Gachora. We have two subject experts, Christine Wothui, and those of you who joined us in the month of March for the webinar on taxation. Christine took us through the importance of, the issues around the taxation and some of the challenges and opportunities we have in terms of managing our taxation well. Christine is a director of Alpha Tax Business Advisory Services Limited, and she has over 18 years of tax management and business advisory experience. She works with organizations to implement and execute corporate strategies for direct and indirect taxes. She assists corporates and industry associations in preparing technical papers for government engagements and lobby work. She works with companies and SMEs or businesses to enhance tax compliance, tax planning, tax execution. She provides tax advisory services in respect to mergers and acquisitions, tax restructuring, and tax pricing. She represents companies in the tax tribunals, treasury, parliamentary committees, and revenue authorities. As a member of the Public and Tax Committee of the Institute of Certified Public Accountants, and a member of the Tax Compliance of the Law Society of Kenya, she works closely with stakeholders in review of tax legislation aimed at shaping the future of tax laws. Please let us welcome Christine. After Christine, we have Edna Onyanch from Guzo Consultants. Edna is a business consultant, a trainer, mentor, coach, team building facilitator, with proven competence in imparting practical skills and addresses various needs of various entrepreneurs, employees, thereby enabling them achieve their various goals. She is currently a co-founder of Your Live Dream Enterprise Limited, which offers entrepreneurship and human capital growth and development solutions. ICT Gurus East Africa Limited, and supports business through various ICT solutions, and Guzo Consultants Limited, which offers various capacity development solutions to businesses and corporates. Edna has 12 years practical experience in the banking industry, cutting across various sectors with key skills in payment and trade solutions and structuring, global markets, business analysis, sales, and portfolio management. It now gives me great pleasure to invite our group director, Mr. Tyrus Muthiga, to give his opening remarks. Tyrus, welcome. Karibu.
Thank you, Stephen. Good morning, our distinguished clients, customers, guest speakers, my colleagues from NCBA, ladies and gentlemen. As you've heard, my name is Tyrus Muithiga. I'm pleased to support the business as a group director for retail banking, which includes our services to SMEs. So I'll start by welcoming you all to today's knowledge sharing session. We believe that this is a critical part of being your partner as a banker to ensure that you continue to grow and develop in knowledge that is relevant to the situations that you are facing. We found that these forums have been extremely useful in helping us understand your needs as customers and deepen the relationships that we have so that you continue to feel that beyond banking, NCBA is partnering with you for your growth. This forum today is part of our ongoing efforts as we all are recovering from the effects of the COVID-19 pandemic, which created unprecedented shocks in all our lives and businesses. We are, however, seeing encouraging signs with the developments on the public health front. COVID infections at a low, they've declined significantly, and the anxiety that was associated with the impacts that we were seeing from the pandemic are easing. The lifting of COVID-19 restrictions in October is very welcome, and we believe that it will go a long way in reviving the economy generally, but particularly within the SME space. We see that since the president lifted the COVID-19 restrictions a few weeks ago, traffic into hotels and restaurants are improving, hotels are reporting improving occupancy rates, conferences are resuming, entertainment areas are reopening, rising demand from the retail sector. The logistics challenges that were present earlier are also easing. We believe that it is also your testimony that you are seeing an uptick or an easing of the constriction of business environment that was present. We are also seeing informal traders doing trading for longer, demand in shops, as I said, increasing. According to the national survey, we know that SMEs contribute nearly 30% of the jobs that are created, and significantly to the growth of our country's GDP. So this role that we all play in the SME sector is really powerful to help with the economic recovery that we're all expecting and driving. I think, therefore, that the topic of today's conversation, positioning your business for growth, is a really timely one. The effects of the pandemic and the disruption in your businesses created cash flow challenges. And I think Adna's conversation will be really, we hope will be really helpful to help you with the understanding of how do I resume to the cash flows that I was used to? How do I rebuild those cash flows? Tax issues also arise when there are disruptions and perhaps losses that you faced, perhaps challenges that you faced, perhaps decisions that you had made to restructure your business. And so I do hope that when Christine speaks about that and how you would position your business in a tax environment that might appear challenging, and as I've said before in previous sessions, in a very dynamic tax environment as well, you'll find it useful. If you look around, many of these SME and informal traders don't keep proper books. I do hope that today you will see the value that your best defense is when you monitor what you do, because then you can control it, you can measure it, and you can understand your exposures in both a cash flow perspective or even a tax perspective. At NCBA, we will continue supporting you. We remain open for business. We are confident that despite the changing environment, for example, the recent announcement that any lending below 5 million will not be reported to the CRBs is not a reason for us to withdraw from the market. We will remain open for business because we know you are honest traders and most people will take a loan with the intention to pay. We are also continuing to partner strategically with such as the consultants that you will listen to today. We have a very useful program with the Strathmore Business School, a partnership with the Kenya Association of Manufacturers, Kayana Create, and the Entrepreneur Organization, all of which provide very useful support and perspectives that help grow your business, irrespective of what your level is. The Entrepreneur Organization, for example, targets those of you who do businesses that are over 1 billion shillings in turnover per year. But that's not to say that there are no other. Kayana Create and all the others are supporting businesses at all levels. So whatever the size of your business, I welcome you to have a conversation with our team so that you can see how our partnerships are positioned to help you grow. We hope that you will find today's session a great learning experience, but more importantly, that you do something about the knowledge you collect today. Some of the, there's a saying, I think, that says that a lot of us, if you do not apply the learning that you acquire in any session, I think within 3 weeks or so, you kind of forget all of it. All you remember is that it was a useful webinar if you don't do anything about it. So I really encourage you at the end of today's session, after Edna has spoken and Christine, please take advantage of the contacts that they will share as part of their presentation. So that if they can support you in any way, please do so. Of course, Stephen and his team of relationship managers are present as well in our branches, on the telephone, through our contact centers, to also link you up and support you in any way that you need support as a businessman. With those few remarks, I'd like to welcome Christine now to take over the program and begin her presentation. Thank you all for your kind attention and for joining us today. Thank you.
Thank you very much, Tyrus and Stephen, for setting the scene for today's conversation. I'm really excited to be here again to interact with the NCBA clients with respect to this webinar. A very interesting session today where we are looking at how do we position ourselves amidst all the risks that we face, and as we get to the post-COVID period when businesses are expected to thrive. So what is risk? We will focus on risk and governance for today's session. So when you look at risk, it is the uncertainty of loss from an exposure or a threat that may lead to deviation from future goals. So you set up business plans a while ago, but those business plans have been significantly impacted. How do you manage that to ensure continuity as well? Risk, on the other hand, can actually be described as a failure to capitalize on an arising opportunity. COVID definitely had its challenges. It created opportunities. And for your business, have you sat down to review and see what opportunities would you have leveraged on or will you leverage on during this season? Yeah, so if you fail, that may also be termed as a risk. Okay, so what do organizations need to do? And this will definitely set the scene for our conversation this morning. Organizations that actually identify and manage these risks are positioned to survive, grow, and remain. So, and be successful as well. So survive, it's been definitely a very difficult season. Grow, we need to see what will take us to the next level in this very difficult season, and remain successful, be in a position to continue with what we were doing, but at an extra level in order to grow the business. So risk creates challenges for sure for organizations, but it also presents an opportunity. And this really depends on how you manage your threats and leverage on the opportunities that come your way. So when we look at it from an SME perspective, and I am myself, I'm an SME, and therefore I'm speaking for myself from the organizations as well, we notice that most SMEs operate in a very uncertain and ever-changing environment. And they've got to take decisions under risks, and these risks are influenced by their financial performance. It is critical to understand your risk in the context of your business, because this will definitely provide an opportunity as to how you will respond to that risk. Remember, all businesses are different. They will be faced with different risks, and therefore you can't have a one-fits-all solution or a mitigation strategy. You will really need to look at your business and look at those risks and see how best to address each and every of those risks. So, you know, with SMEs, we are all entrepreneurs and we are very optimistic entrepreneurs. We are very confident in what we do and we think, I did it last time, it worked, and I can do it over and over again. So that's the challenge, because what happens is that risk management is actually last on our priorities. If I look at most priorities of SMEs, it's how to grow turnover, how to manage their cash flow, how to get more clients. Risk is rarely spoken about. And this is because of the overconfidence that we have as entrepreneurs. But that's the challenge, because when the risk occurs, it hits us so hard, picking up becomes very difficult. But if you took some time to just think about the mitigation strategy for your different risks, it becomes part of business. You realize that I actually saw this coming, yeah? And this is what I had set up in order to manage those risks, okay? SMEs are very reactive as opposed to proactive when it comes to management of risk. You haven't really set up strategies to deal with the risks. So when it occurs, so for example, you want to put in a proposal, you don't have a tax compliance certificate, you start dealing with it then. What about you started dealing with the issues of your tax compliance certificate a little early, so that when that opportunity for a proposal comes in, you're set to go? Okay. Also, from an organization hierarchical perspective, because of the way the organization is flat, decisions are mainly made by one person, and it depends on how that person feels. And this will take us into the conversation of corporate governance, because we are looking at a position of, even if you're the founder and the owner of the business, how do you cascade business solution decision making amongst your team or among a board of directors that will help you put in some thought in the decisions that you make, and you're not biased. You know, there are some biases that just come from your understanding of the business. So most SME decisions depend a lot on the ongoing activities and their financial structure. You're just focused on that one. You haven't really put up maybe a business plan to say, in Q3, this is what I'm looking at, so that you don't get yourself, now, for example, we are looking at Q1 2022. You don't get yourself in Q1 2022 and you're wondering what opportunities will come my way during that season. You may need to work on them now as you work on your normal business. I always tell my team, we do work as you look for more work, you know. So those are some of the challenges that face SMEs when it comes to management of risk. So what we've seen with SMEs is that they rarely put enough resources for purposes of managing the risks. They are more reactive as opposed to being proactive. They definitely have knowledge, but we more or less need to cascade that knowledge also to our team, so that we are all at par, everyone understands risk within the organization. Something to also consider is a board of directors, and we will speak to this when we are looking at it from a governance perspective. Why is this important, the management of risks? Because this is at the heart of the survival of businesses. Yeah, it's very easy to get out of business because of a risk that has faced you. And for me, being in the tax field, I have seen this. You're hit by a significant demand from the Revenue Authority. You don't know what to do, and you're thinking, if I'm to pay this liability, I'm actually out of business. Yeah, from a business continuity perspective, from a compliance perspective, if you are to identify new business opportunities, you must take some time to manage the risks that face you in order to give you a competitive advantage. And if we are looking at positioning ourselves for growth, we cannot do what we've been currently doing. And at this point in time, we are not getting from a normal to growth. We are getting from an abnormal situation where COVID hit us so much to a growth position, and therefore it requires a lot of introspection on your company. So this is why risk management is critical for your organization. So as I said, we do not have a choice. We've got to identify those risks. We've got to analyze each of those risks, and we have to come up with a way of managing those risks. Okay, so I will look at some of the risks that face SMEs. These are common to most SMEs. There are actually so many risks, but I'll focus just on a couple that definitely affect SMEs. Being a lawyer, for me, this I have to speak about, the importance of a contract. Many SMEs get into businesses, into assignments without contracts. And the reason as to why a contract is very important is because it defines the responsibility of each party. If this is not written, and there is a dispute that arises when the contract, the terms of the contract are being performed, the unwritten terms, because in that case you do not have a contract, it becomes very difficult to get a recourse when there is a breach by one party. So the importance of the contract is very, very critical because it also helps parties to understand their responsibilities, and it establishes the time frame for completion of tasks and delivery of goods. You know, most of us say, I will be done in a week. Yeah, but if you were to write it down, you would have paid a little more thought in agreeing on the terms of engagement. Okay, and it also provides a recourse against breach. So we definitely have 6 elements of a contract. This is actually one of the first topics we learned in law school. Acceptance, consideration, legality, capacity, and mutuality. There has to be a meeting of minds. So I would like to urge all SMEs, try as much as possible and have a contract in place. So that's from a contracting perspective. But sometimes as an SME, you may get a contract from a big corporate, and you proceed and sign it without having spent time in reading the contract. Okay, so you don't really understand the terms of those contracts. We've seen SMEs sign exclusivity terms in a contract whereby the corporate has said you can only provide this service to us. And you want to provide it to others because others have heard of you. So did you have an opportunity to negotiate better with respect to the terms of those the terms of the contract? Okay, it also helps to understand when can parties claim liquidated damages when it comes to a contract. What causes a termination of the contract? The force majeure clause, which was an extremely important clause during the COVID season, you're unable to perform, not because of actions that are within your control, you know, so those terms are critical. Again, an arbitration clause. We've seen a lot of SMEs being taken to court for breach of contract. Would it have helped if there was an arbitration clause in that contract that would help resolve some of the issues that arise from the contract? Remember, as an SME, you do not have the muscle to fight some of these battles in court. For the big corporate, it's very much easier for them to do so. So how do you protect yourself from some of these issues? So from a contract perspective, I would really, really request SMEs to consider reviewing those contracts, developing contract templates with a basic minimum. I can tell you from a Google perspective, you will get some very good contracts such that you have some terms of a contract when you're engaging. You may decide to engage the services of an in-house counsel or an external lawyer. It doesn't have to be for every contract, but you may get a very big contract and you're saying, my God, I don't understand some of these terms of the contract. What about you engage a lawyer, agree on a contract-based fee? Can be slightly cheaper than having a full-time in-house lawyer within your organization. Understand your client's contracting process. This is extremely critical. Yeah, if your client says you have to have a PO before you have a contract, did you meet that requirement? So that you don't get out of business because you did not follow their procurement process. So what we are looking at here is, how do you service your client effectively without them taking you out of business? Very easy for the client to take you out of business. How do you protect your interest as an SME to ensure you're not taken out of business? Okay, another risk that SMEs face is a supply chain risk. You know, as an SME, in order to get and grow, in order to grow our business, we have to offer an increasingly range of products in order to meet clients' needs. And this creates high dependence on the supply chain. And your supply chain could be the local market or it could be the international market. So this definitely has an impact on your trade debt and your cash flow issues, which my colleague will be speaking about. And there's also over-reliance of one supplier. And we saw this happen during the COVID season. A lot of people who are in the buying and selling of goods used to buy their products mainly out of China. When China closed down, we noticed a decreased goods market in Kenya, and most of the suppliers had to consider changing their supply chain. Most of them moved to Turkey, but that means that this supply chain risk is very real, and it mainly the risk is even higher where you have a single sourcing mechanism where you source from one specific supplier. So as a business, you really need to identify which elements of your business are critical to your output. You could be in the manufacturing process, and if one thing is not there, it results to zero output. And you need to identify that and see how to manage that risk. Is it from a single supplier? Is there a possibility of getting a plan B? And you're not getting to a plan B when you've been hit already. Can you plan for that earlier? And you know, one thing I realized from an SME perspective is that we don't create time to retreat and identify all those things. We are always running, you know, because you want to deliver, you want to look for work. We rarely create times to retreat, which may be very critical. That time is very critical in order to be in a position to identify some of these items I'm talking about and have a plan B for them. You also need to understand the duty, financial, and tax implications of any alternative supply chain. Maybe your supplier was local, he can't meet your supplies anymore. You've got to go international. What does that mean? It means that you now have to deal with customs issue, which was not your normal kind of issue. Tax issues may emanate from that. So that's definitely very critical in order to manage your supply chain risk. So if you have a single supplier, we call it single sourcing, you need to understand the risks that they are also exposed to. The big one with China, they were exposed to the COVID issue harder than many other jurisdictions. You need to understand those risks, the exposure of their own supply chains. If your supply is local, you need to identify his risks and also the exposure his supply chain has. And also just check if they have a business continuity plan. Most of us are asked these questions when we are getting engaged with big corporates. Please provide us with your business continuity plan. So we must also try and get this information because it's critical for us in delivery for most of our goods and services. Okay, the other risk that I will speak to is the risk and the hazard risk and the health and safety risk. And this risk relates to the work environment, property, and then a natural catastrophe being COVID, employee wellness, the code of conduct for the employees. So how do you manage this? We've seen how different businesses managed the COVID pandemic and how that has really changed the way the office place works. You know, how did you disseminate information with respect to the virus in your organization? How did you adjust the system from a social distance? That's from an office setup perspective. Did you comply with quarantine issues? Timely communication to minimize fear, because business has to go on even during this difficult times. From an employee wellness and business code, do you have some written down policies that employees need to adhere to? And why this is very critical for SMEs is that for you to build trust with your employee, they must feel that you're very objective and not subjective. And how do you drive objectivity? You're able to drive objectivity if you have things in writing. It makes it very easy to drive objectivity from an employee management perspective. Policies on ethics, it's always very important to have policies on ethics within the organization. I remember one term that we learned at the business school was the slippery slope when it comes to ethics. You know, you do something small and you think, no, that's acceptable. You know it's wrong, but it's acceptable. And you keep doing it, it becomes a norm. It's a slippery slope. But when you have a policy on ethics and it becomes that it's a no-no, it becomes very easy for employees to follow through. But when there's an opportunity of diverting from the policy, from the diverting from, you know, the ethos of the business. It's so easy to get yourself into a position that you can't get out of yourself, and it may actually result into the collapsing of the business. So other safety issues includes the fire exit issues and other health and safety policies. Another issue when it comes to employees is the management of working from home. As you know, a lot of employees are currently working from home. Are you planning for regular meetings with them? Is it time for employees to come back to the office? And that will you need to evaluate as your business. Have you created an environment whereby they will be safe working from the office? The office rotation mechanism was seen as a very good way to keep the office setup going. So how do you strike the balance between maintaining productivity and efficiency and providing a safe work environment? Most of us suffered this during the COVID pandemic. There's children at home, you're trying to work, your spouse is also trying to work. So how do you ensure that you as a founder as well, you're working from home, but the employees can actually feel that you're definitely delivering when you're at home as well? Another risk that is very prevalent for SMEs is the employee risk. And this is whereby we look at it from different constituents. You've got employees, but there's no employment contract. And now it's a time to terminate an employee, maybe because of the COVID pandemic or business is not doing very well, and you're wondering where to start. You had nothing in writing. What about you use this opportunity to sit down and structure all your affairs when it comes to employee management perspective? Have an employment contract for each employee. Remember, it must be in writing. It must be in a language that is understood by the employee. The employee must consent to it, definitely signing it. The rights of the employees must be clearly indicated in the contract. This is where you don't have a contract, but you can imagine with the COVID pandemic, maybe there was a revision of the terms of engagement, be it the salary or the scope of the assignment. That must also be consented to by the employee. Okay, so that's from an employee contract perspective. Take time to draft those contracts, have everything in place. This is what I was talking about when you needed to renegotiate the terms with the consent of the employees and in instances of termination due to job redundancy. If the employment contract is silent on the severance pay, when you read the Employment Act, it states that the employee should be paid 15 days for every year of service. And this will require a lot of conversation with the employee because you may want to pay them, but cash flows do not allow for that at this point in time. Come up with an understanding. We actually told that in life, we do not get what we deserve, we get what we negotiate for. So this may be an opportunity to engage with employees and have something in place. So from an employment contract perspective, please ensure that your tax deductions and statutory deductions are up to speed. We've noticed in instances whereby employees are laid off, pay was actually deducted, but it wasn't remitted. And remember, this is the employee tax, meaning that it should have been paid. Then the employee goes to the Revenue Authority, maybe they were trying to get their compliance certificate, and it becomes, you get exposed as a business. So it doesn't only become the issue of that employee. Now KRA decides, I need to come and audit this SMEs. You know, SMEs haven't really been a focus from the Revenue Authority in the past, but we are seeing it increased. And why is this the case? The Revenue Authority had been working on a parental principle, focus on 20% of the taxpayers that gives you 80% of your revenues. So the main target has been big corporates. But now it's become very difficult to get any more money from the big corporates. The big corporates are also becoming very litigious, where they do not agree with the position of the Revenue Authority, they are going to court. They've got the muscle to do so. Now the focus has really changed to SMEs because Revenue Authority says that very little taxes are collected from them. So you need to ensure that once you deduct pay from an employee, please remit it, because that may be the source of the tax audit that may be coming your way. One other risk that we see from an employee perspective, and very specific to SMEs, is the over-reliance on one employee. You've got a star employee, and you know that employee is going to deliver when you're not there. But what happens when that employee leaves? You're caught unaware, you can't deliver anymore. Clients are on your case. You do not even understand what that employee was doing. So you really need to manage that from a risk perspective, because your business can actually come to a standstill. So what do you need to consider doing as an SME? Consider having a role profile and a job description so that you understand this employee does 1, 2, 3, and 4. And you understand the nature of that job so that if this employee maybe leaves without notice, you can be able to do a handover to the next employee. You'll also need to treat this employee well so that when you're saying there's a 1-month period for purposes of handing over, this employee is able to do that on time. Okay. Consider also process narratives. And this mainly happens with individuals in the service sector. This is how our work is done, but you do not document it. If that employee leaves or your laptop crashes, it's done. It becomes very difficult to manage going forward. So consider a process narrative where you say, for this kind of work, this is the steps that we follow. So that if that associate is not there, you will just pull up that process narrative, and the next associate will be in a position to continue with the work. And again, it may not be the exit of that employee. It could be through illness. And therefore, for that period that they're not there, the business cannot stop. There's got to be business continuity. Okay. Then from a data sharing and data storage perspective, consider cloud-based technology so that if the laptop crashes or the laptop is not there anymore, the data is still available. You do not need to reinvent the wheel. There's a lot of information that is actually saved in our local machines, and you can tell the despair of founders and owners of businesses when the laptop is not there anymore. Okay, so those are ways that you may need to put in place in order to manage the over-reliance of a specific employee. Another issue that I always hear, because I'm in a lot of SME groups, is in the issue of the different kind of employees that you engage. You could have a generation X who has a different approach to work, a generation Y, and a generation Z. Very different way in which they deliver. And if you do not manage these generations well, it may result into burnout, because there are some of these who are such workaholics. It may result in unfulfillment. We have the instant employees who want it now, right now. If you're not able to fulfill them, they exit. So may result into a lot of exits. It may result into no teamwork, because there are some employees within these generations that prefer to work alone. But how do you manage your associates? Because for most SMEs, you might have different approaches, or you as a founder is a generation X, and you're dealing with your employees who are in a generation Z. How do you ensure that there's no clash within these different generations? You need to understand them and leverage on their key strengths. There's a lot of information on the network and a lot of trainings as well in respect to this. You need to harness their potential. They are all critical for the growth of your business. Remember, you cannot do the same thing you've been doing and expect different results. I, as Christine, I may be a generation X, and I know I've done it this way and it has worked. But you need that generation Z in order to position your business for growth. Okay, so use of your digital know-how has to improve. Paint the big picture about the organization, and you may just need to get out of the box. Consider some social impact, and those are some of the things that may be very critical that will drive some of your associates in order to get the best of their output. Invest in training. SMEs, we are known for, we don't want to create time to learn. I'm really happy to see all those who've joined here today. This is a great opportunity to learn. So SMEs need to consider investing in training. issues of diversity and inclusion are very critical if we are to move to the next phase. The strategic risk, and this is a risk arising from change in the business environment, the poor strategic business plan, inconsistency and inappropriate implementation according to plan. We had amazing business plans, but because of the circumstances, we are not able. So strategic risk poses threats to earnings, it poses threats to capital availability and the corporation's viability. I won't deliver this point because I know you've seen it. The airline industry was significantly affected. The events management team were caught unawares. Their business model was completely changed, so a lot of things changed during this period. We had very good contracts. You had a contract and you knew that contract for the next 3 years, your cash flows are managed, your turnover is managed, then it's not renewed because there is no business opportunity anymore. So those are the risks that faced us as a business. What do you need to do in order to manage that? You may need to consider remodeling your business strategy. Sit back, come up with a different business strategy, or review what you currently have and see how you can develop it even further. You may need to diversify. You only have one stream of business. What about you consider new streams of business? Business collaboration. You may realize that for me to be able to grow, I may just need to partner with someone else in order to be in a position to grow my business. Close the opportunity gap. If you see an opportunity, leverage on it. Value proposition, try and drive value. Be a person who can drive value for their clients by creating a certain niche of service that will make you very, very proactive and productive for the sake of your clients. Managing strategic risk, we know cash is king. So review unaffected business lines and prioritize the allocation of resources to the unaffected business lines. Explore and identify new business models. I discussed this. So your employees also need to understand your business, what your business is going through, because that may be the point where you get more opportunities to take your business to the next level. Financial risk, I won't speak a lot about this because Edna will also be talking about cash flow. So we are talking about the funding risk. Capital is really critical for the survival of an employee. Your investment risk, your pricing risk, and your credit risk. So SMEs are very highly dependent on external finance. Those are from the financial institutions and the microfinance institutions as well. So a strong financial position can to a large extent compensate for high risk tolerance. So where do you go for funding as an SME? Sometimes you may need for some POs to be funded. How accessible is that finance for you? So how do you manage some of this? The review of your business cash flow, operational forecasting. Have you reviewed your next 12 months to see how you'll be able to meet your cash flow for that period? Manage your debtors. You've got a 90-day period for you to receive payment. Is it possible to speak to your clients to reduce that because of the challenges that you're facing? Review of your contract loans. Ask for moratoriums with the bank. Some of these things may just work to your advantage. So from a management financial risk perspective, you need to review and see how are your financial ratios coming out. Can you negotiate payment terms with your suppliers as well? So on the one hand, you're negotiating payment terms with your debtors to bring in cash even faster. On the other hand, you're negotiating payment terms to your suppliers to see if you can have some delayed payments. Consider leasing versus buying, because when you buy assets, you tie in a lot of money. Can you consider leasing some of those assets? Another risk is a reputational risk. So you're looking at the business loss, you're looking at lawsuits, the issue of liquidation, and we've seen this a lot. How a poor decision can cause shareholders to pull out their funds. So how do you manage your reputational risk? As a business, consider having values for your business. consider having your data protection, because some of this risk are as a result of some of your critical information getting itself onto social media. Customer service measures, so that you don't have a Facebook post that talks about something that you did and you know that that could have been avoided. Ethical conduct, managing external stakeholders. Reputational risk has to be part of your strategy and planning. I know when we do strategy, we mainly look at the financial aspect. Please have reputational risk management as part of your core issues to discuss during your business plan. A strong control environment is extremely critical so that nothing catches you by surprise. Focus on positive communication, leverage on it, make it, cascade it within your organization. I cannot complete talking about risks without discussing the tax risk. The issue of a tax compliance certificate. You want to put in that proposal, you can't, you don't have a tax compliance certificate. You're seated, you receive an agency notice from your bank that they've been told you cannot operate your account anymore. And you're wondering, why is this catching me by surprise? How do you manage that risk? You're in business, and then you're hit by a letter from the KRA, they want to do a tax audit. Those risks are so much alive. And this is because there's also a lot of pressure from the Revenue Authority to collect. And we've seen this in the current social media posts. So from a tax compliance perspective, please know your due dates, because your due dates are critical for your tax compliance certificate. You're actually denied your tax compliance certificate because of the information you yourself has put across on your iTax platform. Know your due dates, your VAT date, your withholding tax date, and your PAYE date. Those are very critical. Ensure the taxes are paid on time and the returns are paid on time. But in some instances, you may not have the money to pay, or you forgot to declare the tax. Pay the tax, apply for waiver of penalties and interest immediately. Okay, if you do not have money, engage KRA on a payment plan. Follow through that payment plan, and those have been accepted. We've seen payment plans of between 7 and 1 year, and it happens sometimes that you don't really have the money. And let me tell you, it will become very difficult for you to hide yourself under the carpet because of the interconnection of the system. You can't tell KRA you don't have corporate tax to pay, whereas someone withheld tax from you. Or you do not have VAT to pay, whereas someone accounted for withholding VAT on a payment. So because of these interactions between the system, it becomes very difficult to hide yourself from KRA. You will get exposed at some point in time. So try as much as possible and drive compliance. Also understand the dispute mechanism. I can't go into this in detail, but this is also very, very important. Understand what happens when you're hit by a demand, you know, or an assessment. Because what I've realized with some of my clients is that you've been hit by an assessment, but you're coming late to us to help you with it. You need to object to that assessment within 30 days. If you don't object, you lose your opportunity, or you need to apply out of time. So that's also very critical for you to understand. This is what happens from a dispute resolution perspective. I received an assessment. It's not the end of the world. You can push back, but you need to follow due process and respect the timelines from a dispute resolution perspective. Okay. Quickly on corporate governance. I think I have 3 more minutes. So corporate governance refers to the process and structure by which the business and affairs of an institution are directed and managed. And this helps to improve the long-term shareholder value by enhancing corporate governance and accountability while taking into account the interest of other stakeholders. So why is corporate governance critical? It gives the long-term value for the business. Whereas risk management is a day-to-day of affairs, corporate governance gives the opportunity for the business to grow and to be sustainable for a longer period. So SMEs need to start governing their companies based on a certain set of principles. You as an SME, do you have a set of principles that governs the way you work? That governs, these are the ethos of the organizations. And we've seen that governance provides more security and a better return on investment for companies. And for family-owned business, we realize that governance helps to manage risk between family members. Okay, so governance is very critical in attracting investors. An investor who wants to put in money in your business from a PE fund perspective or from a venture fund perspective does not only focus on your financials, they also focus to see how your business is being governed. Are you the sole decision maker? How do you ensure that you do not get influenced or affected by the biases that affect a solo entrepreneur? So corporate governance is critical. So why is it a challenge for SMEs? SMEs need to create more time for awareness when it comes to governance. They need to put in a little more money. So we see that SMEs are scared of putting up a board of directors because they're wondering, how will I pay directors' fees? But what about you think about it and say, we'll come in as 5 SMEs, we'll each sit on each other's boards for free for now, so that we are able to get a structure for the different organizations. That may be something to consider, so that it doesn't cost you, but you leverage and harness on the potential of each and every other person within the different entities. The business environment also creates a very difficult issue when it comes to governance, because you have an economy, Kenya, which is characterized by widespread corruption or weak enforcement or law regulations. Company action to implement corporate governance standards may be frustrated and have limited impact. You as an organization may be saying, we have these structures, Christine, we have these values, but it's so difficult to survive in this environment and still adhere to our principles. So that may call you to also leverage on other SMEs to get ideas. So how are you guys surviving in this environment if you're still trying to be ethical and you're still trying to ensure that you abide to your laws? So that helps to have a collective way in resolving some of those challenges. So from a governance perspective, you need to review your business, identify governance gaps, develop tools in order to enhance it, and then implement them for sustainable growth. For SMEs, there's usually the failure to see the urgency in improving governance when compared to other pressing issues like cash flows. You know, you want to focus on cash flow, but what about you? You make governance as critical as cash flows, because that will give you the long-term growth for the business. So some of the elements in a good governance environment, there should be a clear reporting line and clarity about how decisions are made and the risks, how they are controlled. Have an approval process. You as a founder cannot approve. You cannot create and then do the approval. Try and come up with a structure from an approval perspective. Come up with an escalation perspective. You may also need to consider to delegate some of the authority that you may have with respect to some of the issues that you deal with, so that even in your absence, the business can still proceed. Understand your role and responsibility and limits of authority. Have an understanding between risk and reward, so that you understand how far can I push an agenda and what does that mean to me. When you've got all this in checks, it helps you clearly think through some of the processes and some of the things that you can engage in as a business. Establish a very good and controlled environment. Have processes for your HR. You may think you're small or you're still growing or you will do it later, but try and institute some of these processes early. Procurement, how do you procure? Are you the one who decides we are getting this from here? A chart of authority, in my absence, who does what? So policies and procedures, they can be basic at a start, and then they can grow with you as you continue to build your business. Finally, consider a board, because a board helps to monitor performance and manage conduct. It also gives you an opportunity to bring in expertise and to grow your networks. As I said, you may decide, let me sit in your board and you sit in my board for no fee for now, and be able to grow our businesses. Risk management team, consider one that will be independent of business operations, so that they can be able to spot all the slippery slopes and tell you, no, please, can you deal with this issue in a different way? So what's next? For you to really get to your potential and grow your business, risk management and corporate governance is definitely critical. Thank you very much for the session. Over to you, Stephen.
Thank you, Christine, for such a wonderful presentation. I've seen a couple of questions, though you responded. We'll be sharing the links to all the presentations today after the sessions to all in attendance. So please don't worry, don't bother taking photos or all that. We will share the link with everybody in attendance. As we proceed, please continue posting your questions on the chat box. We'll respond on the go with the consultants and also the bank. And then we'll have a brief session at the end of today's presentation. Key takeaways from Christine's presentations, from my perspective, the importance of identifying, analyzing, and mitigating risks. She's taken us through the importance of cascading knowledge within our organizations because it helps in terms of business continuity. She's taken us through 8 key risks, if I captured them correctly. There's a contracting risk, supply chain risk, health and safety risk, employee risk, strategic, financial, reputational, tax risks, and I think very well elaborated. I don't need to go into, but I think most important for me is that risks are day-to-day activities, while corporate governance is basically what determines a successful business today and a successful business into the future. With those few remarks, please continue posting your questions, comments on the chat box. Christine and our team will respond as we proceed. Without much ado, I will invite Edna to take us through the cash flow management piece. We have hard stop at 10 a.m. We appreciate our customers are leaving. So Edna, over to you. Thank you. As Edna projects our presentation, we'll also be running a short call as we go towards the end of the presentations. I politely request that all the participants please participate in that call. Edna, over to you. You can hear me, please.
Yes, thank you very much, Steve. And thank you very much, Christine, for that very critical talk. I think what we can pick from Christine's talk is that there's so much that we need to do with regards to risk management, but all this require some cash. So do we have this cash? My name is Edna Onyach, as you've heard, from Guzo Consultants. We help you with skills, experiences, knowledge that help you build sustainable businesses and also grow your business. And more information can always be found in our website. So our topic of discussion is planning and managing your cash flow. But before we start, it would be good to think for a minute and ask ourselves, are we happy with the cash flowing in our business and out of our business? Think about it this way. The amount, the frequency of how it comes in and goes out. So we'll respond to a very short poll. We'll launch the poll shortly. And the question is, are you happy with your business cash flow? So let's take 30 seconds to respond to this, then we'll be able to share the results. Is there a response? I'm not able to see response from my side. Yes, I can see the response is now coming through. I think we can work with what we already have, so we can close it and share the results. And I believe you are able to see the results from your side. So very satisfied. We have 5% of us saying we are very satisfied, and congratulations for that. Then there is 31% satisfied. Congrats, and I think you can also go to the 5% very are not satisfied at all. So we are going to see by the end of this session, what are some of those things that we can start doing in our business or stop doing in our businesses so that we can go to those people who are very satisfied. We can join them. So our objective today is to be able to describe what is cash flow. How important is this cash flow planning for our business? How do we manage, how do we plan this cash flow? And I would like us to think about cash flow from this bucket we can see here. There's water flowing in and flowing out, and that is how cash comes into our business and goes out of our business. And it's very normal to have such a thing, cash coming and cash coming out. But could it be that by some of the ways we do our business or we do not do our business, we end up poking even more holes in this bucket that make unnecessary cash flow out of our business? Or perhaps into the business is too small to the extent that it cannot support daily running, daily operations of the business. So our cash flow is just a total amount of cash coming into the business, also called inflows, and out of the business called outflows. What are these activities that make money come into the business? Think about receipts. When you sell your goods or services, you get money. When an investor brings more money to the business, maybe you want to expand the business, that's inflow. When you get a loan from the bank, that's inflow. Outflows, on the other side, are cash that go out of your business. Think about the loan repayments. Maybe you are doing some repair works, you are buying raw materials, you are paying your utility bills, and the rest. It does not include your debtors. Debtors are those who owe you, and creditors are those whom you owe. It doesn't include debtors, it doesn't include your creditors. An example, within a particular month, you are able to collect 1 million. So that becomes your inflow and not the 50 million. And it could be positive or negative. And this is what we call net cash flow, is just the difference between what comes in and what goes out. Being at a positive level is good, but being at a negative position is equally good as long as you understand your business model and you know how to fix the gap when your business has negative cash flows. Cash flows has been compared to blood for human beings. Personally, I compare it. I normally say a business without cash is like a nation without a ruler. That can be really chaotic, isn't it? But let us also see what happens. Like, we can look at an example we are familiar with. What happened to Nakumatt when they ran out of cash? We saw suppliers running to the court, whether they are going to be paid what Nakumatt owed them or not. And then we saw loss of job, loss of income, not just for the employees, but even for the owners. And we saw stress, depression, and in unfortunate situations, we even see death. And this is something that can actually happen to us, and we should try to see how we can avoid this. So let us see a concept called cash flow cycle. This is very important in helping you understand how cash flow operates for your business, where you probably are experiencing a challenge, or it can also help you identify root cause to your problem. And we are going to see a diagram, and we can share an example of a friend of mine who he makes motorbikes, he manufactures motorbikes, but he imports the parts from China. So my friend normally pays when he makes an order. He makes an order. After 2 months, the supplier in China will prepare all the raw materials and ship them to Kenya. When they reach Kenya, my friend will go and clear them at the port and bring them to Nairobi. And it takes another 1 month. Those are 3 months from the time he made the order. Then after that, he has the raw materials. He starts converting them into work in progress. So he'll reach a level where he has skeleton bicycles or motorbikes. It takes him another 2 weeks. Then another 2 weeks, he has his final motorbike ready. Another like 1 month. So those are 4 months from the time he's put in the order. After that, he'll have these bicycles or motorcycles in the shop for another 1 month as he displays them and also as he looks for customers to buy. Those are 5 months. Then the customers will buy, he has corporates buying from him, and he has given them payment terms. So they pay of 6 months from the time he puts the order to the time he's getting paid. Mark you, he's only given 1 month to make the payment to the supplier. So what happens? Because he needs to pay his salaries on a monthly basis, he needs to pay his loan repayments if he has a loan, he needs to pay utility bills on a monthly basis. And this is what happens to most of us. That is our cash flow cycle. It tells us the difference between the time we are receiving payment and we are making payment. And for this example, you can see that he's out of pocket for 5 whole months. What happens during that time? Perhaps he has a facility with the bank which helps him to handle that situation. What about you? What works for you? This is for a manufacturing company. If you are a service company, you'll realize that your cycle will be around finished goods, then you have your sales, then cash. The same thing happens. What is important is, have you identified your cash flow cycle? How long does it take? What are the strategies that you are putting in place to address those gaps? If you are taking a very long time to get payment, whereas you are taking a shorter time to pay, have you engaged these suppliers? Christine has told us we can even engage KRA. We can engage our suppliers. We can negotiate with them. Have you negotiated for better terms of payment? Perhaps that is where your problem is coming from. So for in the 13 years that I've been working with SMEs, there are a number of challenges that I've come to understand most SMEs suffer from. And we are going to look at a few of them. There's this friend of mine who was telling me she got a very big LPO, but they could only pay her after 3 months of delivery. She was making uniforms and supplying, and she needed to even take another 1 month to make loan for the LPO, and it was a decline. Reason being, she didn't have records to show that she has done such a job or she has the capacity to do it or historically done it before. So she was not able to handle that. And that happened during this COVID season when people are looking for business, and she was not able to take advantage of that. For us who are doing our financial statements, we are having them audited. Do we really understand what is in there? How often do we take time to go and review that information and work on it? Or is only when auditors share it with us or the bank is calling for it? What about planning ahead, forecasting? Do we sit back? How often do we do that? To take a leave from our business, see what is happening, what is working, the gaps that are there, how we can address them. And then there's theft. This is something that is killing so many businesses. There's this friend of mine, he runs to do an impromptu check. He was not supposed to be at work that day. He had his employee in the shop. So when he went there, he was so surprised. What did he get? A stock that does not belong to him. And that is what our employees are doing. So you are wondering why your stock is not moving, and they're actually bringing in their stock and selling it right in your shop. Employees will do all sorts of things. They will collude with suppliers. They will pay ghost suppliers. They'll even increase the invoice amount, and then they share that amount with your suppliers. They'll forge your signatures. open accounts similar to your accounts and reroute all your payments and checks to those accounts. They'll pay themselves having worked for 6 hours, but they'll be paying themselves for 8 hours. What are the checks and balances that you have put in place to address this? How often do you do audits? How do you screen them when you are employing them? Do you even have CCTV, something, a bare minimum to at least? I've seen many Kenyans, many SMEs suffering from a lot of debt, substantial debt, and most of us don't even understand we don't do cost benefit analysis before we get into debt. So you find people going for capital to solve all the problems in the business, whereas some issues can be solved without capital. So there's this friend of mine, when I was in the bank, he was really suffering. He was running a petrol station, and we had given him an overdraft facility because he had to pay for his fuel before he actually makes the sales. But he was still struggling, and this overdraft facility was always maxed out. It was not helping him. So I sat with him one day and asked him where the challenge was. And he was very honest with me. He said, Edna, when I got this money, I had always wanted to have land for my family, to build a home for my family. So I took it and purchased some piece of land. And then part of it, I used it to purchase new furniture for my diverting funds that is meant for the business and doing it, putting it in personal stuff. There's no way you can take short-term funding facility like an overdraft facility and put it in a long-term liability, long-term asset like land. You will be welcoming problems to your business. There is an African saying, and it goes, Nying maber emichiemogo, translated to mean, a good name feeds you. What is your character like? Because your character is what even your employees will pick, and it will deter you from getting a lot of benefits, even from your bankers. What about insufficient profit margins? There's a friend of mine who told me, I'm working very hard. I'm running a restaurant business. At 5, we're already up and running, and we close between 10 and 11 p.m. And customers are coming, but we can't see this money. Where is it going? And then I said, let us take an example of one of. How much do you buy in a day? She tells me. How much goes into making these chips? How much oil, ingredients? What about indirect costs? What about the labor, the rent? She was not able to answer. So you see where our problem comes in. We could be underpricing and thinking the profits are not there. Why couldn't we drop those products that are not bringing any profit to our business? There's this other sales, another friend of mine, she tells me, the competition is very stiff. I am running hardware shop. Everyone is selling the same things. And then I say, why don't you give them discount so that you increase your sales? And she says, I've already given them discount and I can't do it any further. So I ask her, how do you source for your raw materials, your materials? And she says, I do it 4 times a week, or 4 times a month, meaning every week I am getting new supplies. And there is transport cost attached to it. And then you'll be saving a lot in transport cost. You'll be actually slashing by 3/4. And that amount of money, you can put it and give it as a benefit to your customers in terms of discounts, and your sales could actually improve. What about the cash reserves? Do we have cash reserves? When we have those ad hoc requests, we have that big business that comes, like for my customer who had the LPO, what are we doing about the creating some emergency fund that helps us? Because this is the fund that will help us even manage our margins. Whenever we go to the bank or we go to the other financiers to get money, we are actually giving them part of our margin. And remember, you don't just need an overdraft facility and an LPO line to sort out all your problems. Imagine your customer perhaps maybe paying you after 3 months. You could actually invoice your customer. Give me part of this money, I do the work. That is called invoice discounting. And for my friend who is importing from China, he's taking a whole 7 months to receive payment. Why can't he work together with his supplier and together with the bank? They enter into an arrangement where He'll just pay when he has been paid. And the supplier in China will be very sure that he's going to get his payment in the long run. That is something called LC financing. And you can actually even give your supplier guarantees. Tell them this is a guarantee from the bank. It assures you that I'm going to perform on the job, and so give me some advance payment. So as you can see, we have very many solutions that we can use to address our various finance gaps. And these challenges are many. We are not able to exhaust them during this session, but there are some things that all of them, they have solutions. So that is the advantage that we have. Important to manage our cash flow. I had this customer when I was in the bank. He was one of my favorite customers. The reason being, he was a very good planner. He makes these diapers and hygiene products like the tissues and the rest. And he used to import a lot from India. But something happened with him. The dollar rate would always go up and up and up. But his profits also went up and up and up. And he commands a big market share even as we speak. Why? Because he used to exploit market conditions. When the dollar rate is low, he would buy a lot of dollars, keep them, and then use them when he needs to do so. And he would take advantage of discounts, and that would reduce his costs. And that is the important element in planning. It helps you in so many ways. It helps you create and maintain goodwill with your customers, with your suppliers, with your creditors like the bank, and you'll have improved. Actually improve because you are paying them in time, and their loyalty will improve. And that is a plus for you. You'll be able to evaluate your performance and also monitor your progress. And you'll maintain solvency status of your business, the ability of your business to go on as a going concern. You'll be able to meet obligations as and when they arise. And that is what everyone wants. You want that, your banker wants that, your customers want that, your suppliers want that. And you'll be able to secure loans easily on better terms. Imagine today, you know, next year, 2022, I'll need some LPO finance. You'll go to the bank today, start discussing with them, help them understand your business, and it is your business to make the bank understand your business. It is not the other way around. So let us be friends with our bankers. Let us make them be our financial and growth partners. So then how do we maintain this? How do I plan for 2022? We are going to look at very basic elements, which is total cash in, total cash coming into your business. Then there's total cash out, cash going out of your business. Then there's net cash flow, the difference between the two, cash coming in and cash going out. And then there's opening cash balance, which is the previous period's closing balance. So if my records are on a monthly basis, then this is the closing balance for October, if I'm talking about November. Then closing cash balance, which is actually cash in plus cash out minus opening cash balance, and then you get your closing cash balance. But we are going to look at a practical example. I have a friend of mine, he's called Zawadi. Zawadi has been in business, but he's planning to do a different business. He's done his market research, and he feels like this is some locality. So I told Zawadi, kindly share with me your cash flow plan. And this is what Zawadi shared with me. He did it from January to June, but you can see what I would like us to focus on first is January to March, and then we'll be able to see the other 3 months. So look at what happens in the first 3 months. We have got cash sales. He's going to start in January, but he's going to start selling from February. And there are some clients who are going to be paying him after 30 days. He's given them, he's going to give them better terms. He is receiving rent from a rental that he has, and he has a soft loan from his family Chama of 400,000. So his total cash in is for 50,000 in January, 180,000 in February. And let us look at the total cash out. It's very substantial if you compare it with total cash in. We have 593,000 in January and 253,000 in February. So for all those 3 months, despite opening with 110,000. This is the money that will be sitting in his account as he opens the business on January 1st, 2022, and it is his savings. Look at his closing cash balance. He's going to be on a negative level, which will be increasing as time goes for the 3 months. So I would like us to imagine we are advising Zawadi. Do you think Zawadi should progress with this business idea? He actually doesn't have cash. He'll be running out of cash, as we can see. So whether your answer is yes or no, you can keep it to yourself, but we are going to see again if you are going to change that position when we look at April to June. Now let us look at April to June. As you can see, things have started changing and improving. If you look at net cash flow, we are now on positive and 17,000 and 257,000 in June. Look at closing cash balance. It is also improving and positive in May and 342,000 in June. So what can we learn from this plan? We learn that if we do a short period when we are planning, it may not give us the correct position. We start our businesses to run for years. We don't start a business to run for 1 year or 2 months. So it is very important that when we are planning, look at a longer duration as opposed to a short duration. The other thing it will show us is we will need cash at some point. Zawadi knew that at some point he'll need cash, because where will he get this 33,000? We will allow you to overdraw your account to the tune of 33,000 and 106,000 and 109,000. So it shows that there is a need to go to the bank and negotiate with to help me manage this deficit for this period of time. What solution are you able to give to me? I would like us to look at another scenario. And here we are going to compare two different sheets. So the first sheet on your left is the same as what we have already seen. The only difference there, it has a line, no loan repayment holiday. So as you can see, under cash out, there's principal and there's interest repayments that he'll be making every month from January to June, 70,000 and 3,000. And what is the impact of making this payment every month? We can only see it if we look at the other schedule, the other sheet on the right. So look at this sheet with the loan repayment holiday. And this is a challenge I posed to Zawadi. I asked him, family Chama, ask them for a loan repayment holiday. Then this money, you can actually put it back to the business, make more money with it, and you'll be able to pay it back. So he went back, they agreed, which was good, and he was able to regenerate another plan. And this is what he came up with, whatever you are seeing on the right. And look at the difference. There is no loan repayment from January to April to May, but there is in June. So he pays his principal and he pays his interest. And look at what happens on the net cash flow. It improves throughout. It's only negative once. And when it is negative in January, his opening cash balance came in handy to arrest that situation. So throughout, he doesn't require cash. He's closing the month on a positive note all the months. So what does this tell us? For a moratorium, also called loan repayment holiday. And when we do this, it's normally a win-win to both of us. We will not have bad debts, will not have arrears, will not be listed in CRB, we'll be able to repay our loan in time. On the other hand, the bank will not have the bad debts. So it's a win-win. Why can't we take advantage and always engage the bank when we are facing cash flow challenges so that we can manage them effectively and efficiently at lower cost? So ladies and gentlemen, that is what I can share for now. It would be good to hear from you. What is your key takeout? What is your key takeout? I'll not ask you to type it on the chat, but I'll ask you to write it somewhere for yourself, because it's something that you can actually go out and try and get additional information on, or actually engage us if you need our help. And reduce your costs. Try to reduce your costs, keep them at minimum level, but not at the detriment of your business. Increase your income, because everything we are talking about risk management. You need cash to be able to address that in your business. So increase your income, then effectively manage the surplus that you are going to start generating. If you don't have an emergency fund, please have it. It will come in handy, and there are various investment tools, very liquid, that you can use to actually earn passive income and also grow your revenue, like the unit trust. We are saying engage your financial partner for holistic solutions. There is nothing like an overdraft will always solve all your solutions. Yes, it is a good solution, but your business is unique. So talk to them, let them advise you on what they are able to. Seek help. Don't seek help from your family members, not from your relatives, not from your friends. These people have good intention, but they're not the right people. They don't have the skills, they don't have the experience to be able to address your specific needs. So go to the right person and get your help from there. I would like us to take just a minute to think about an action plan. What are those 2 things that I am going to start doing following this session? And I would like us to just type on the chat. Not sure if there's something on the chat. Yes, thank you. Negotiate with my suppliers for more favorable payment terms. Manage cash outflows. That's another question which we'll be able to address later. But thank you for those comments. Yeah, so those are our contacts. I'm not sure if you are seeing my screen. Are you seeing my screen? I believe you can see my screen now. You can email us at info@nguzoconsultants.com or visit our website. And ladies and gentlemen, I would like to take this opportunity to just thank you for listening, for sharing, and for this opportunity to learn together. Back to you, Stephen.
Thank you, Edna. Thank you for your great presentation. A couple of takeaways: the importance of planning cash flows. We're able to manage market conditions. We're able to negotiate for discounts. And I think most importantly is when exchange rates are favorable, we're able to make some transactions favorable to our businesses. It helps us to, to create a goodwill with our suppliers, with our customers, with our employees, with our families. And I think most important, it's able to help us generate funding, and funding could be from any source, could be from your business partners, equity partners, from your bankers, and the rest. This has been very, very useful. I think it's also important to identify your cash flow cycles for you to be able to plan better and negotiate for better terms with your trade partners. I think we are coming towards the close of the session. I've seen a couple of questions which have been responded to. I think I'll just pick one by Susan Nyaga. I think, Susan, you are HR specialist. As you mentioned, you don't need an LC. I guess we need a meeting with you. You may not take intellectual intellect as collateral, but we have many other ways that we can be able to work together through some of the partnerships you have, like with the government of Kenya through the credit guarantee scheme, which we signed off in April this year. We have arrangements with what you call the Africa Guarantee Fund. I think I talked about it in our last session. So please talk to your relationship manager, your branch manager, or contact Susan on the contact that she shared on the screen. And then we can have some useful engagement. I think I'll pause there and ask Susan Dongo, you are helping us in picking questions. Is there any question that has not been answered either by Edna or Christine or myself that you need to respond to, please? Susan.
So maybe what I could do, Steve, is there's one that we've responded on with respect to corporate governance, but I think it will just be good to speak aloud about it so that we can be able to reinforce the point. And the question that came with respect to that is, when you're choosing your corporate board or your board of directors, what do you need to look out into? Because these are the people who will take your vision to the next level, and it's a long-term engagement for purposes of your organization. Some of the things that you need to do when you're selecting your board is to see what skills do you really need that you don't have, so that you can leverage on them. They have some expertise that they're bringing on board. That may be very helpful. So for example, for me, Christine, I'm a lawyer and an accountant. So I'm so very focused from a service level perspective, but I need to understand some elements of a finished good business, because there are some elements of the finished goods business that I can be able to tap on to bring into my organization in order to make my organization whole. And I like the question that was asked by, with respect to the HR service sector. Services sometimes tend to get forgotten, because there's definitely so much emphasis on a goods business from an asset perspective. It's easy, they are tangible. Service perspective, even from a government lobby perspective, they more or less tend to be forgotten. So some knowledge from the goods business perspective, if you're specializing in services, may be very helpful in order to reinvent your business. Another very critical point is the value of the business. You must get a board of director who you share more or less very close values, so that they can easily pick up and say, no, Christine, that's not allowed. You need to reconsider other options. And they can share with you other options that they've been able to put in their business that has worked, and you two share the same, so that you're able to grow the business. So the value proposal, your values need to be aligned, and also the skill set that they're bringing must be helpful for your organization. Thank you.
Thanks, Christine. There's a question that I picked by one Lillian Ochieng.
Yes.
Whether you need a formal contract for casuals who are engaged on a weekly basis.
Okay.
I think I picked it in the course of the discussions.
Okay, so I know because of the frequency when they come and go, you may think you don't need a contract, but let me tell you, Steve, when it becomes very difficult and issues start emanating, you may wish you had a contract. So in that case, what I would suggest is that you have a simple template, and the way the template is worded is that this will govern the relationship between an employer and an employee every time you engage them as a casual, so that there's an alignment of minds, And same case, I always tell people, even for our house managers, our helpers at home, may also be useful to have a contract. Some of us have had our helps for more than 15 years, and they need to know what their rights are after the termination of that period. So even those casual laborers, you're engaging them on a week, have a simple template and let it govern every other relationship you have with them on a short-term basis.
Thank you. There's another one by Caroline Karanja. She's asking you, how do you approach board members? I guess the question is, how do you get to know who are the right people to join the board of an organization?
Okay, so one of the things that has really helped for me in approaching board of directors is networking. It means you have to go above and beyond as an SME to interact in other people's businesses. Someone might have a webinar and you're thinking, maybe there's one thing that I can tap from it. Some of them are free, some of them you may need to pay. What about you consider joining it so that you're able to see what is this person's specialties? Are those some of the needs that your organization really needs? And that will give you an opportunity to interact with them. Networking is very critical. And Steve, I'll speak about women. Sometimes we are very comfortable in our space. We rarely go out, and that's what really is stopping our businesses from growing. So create an opportunity to diversify, create an opportunity to meet people, and that's when you'll be able to identify who is necessary for your board. However, you as an individual also must be ready to also serve in other boards. And it can be very time consuming. So it needs to be in a very structured way. And you really need to come together and align that we are working together to arrive at this objective for this specific period. Then you're able to leverage on each other's skills. Networking is very important.
Thank you. There's another one here by David asking how much do you pay board members? David, I don't know whether you're asking whether these are sitting allowances, their monthly salaries. I think, Christine, you can tackle that broadly.
That's a good question, David. Let me tell you, as a startup, it's very difficult to agree on a remuneration strategy for directors. So what you do is that you offer your services to them as well. So it will be a win-win for both organizations. Then as you get to grow and as the impact of the board of directors is realized within the organization, you agree on a certain payment. I mean, a board where we are paid 10,000 per sitting, and so in that, and the sittings are once every quarter. So it may look small, but I definitely understand the size of that SME and the services that we are providing. But it's in the hope that the business will grow and that you've had the impact on their business as well. So it will really depend on the size of business, what your role is in as a member of the board in that business. So it will definitely be dependent on many things. And as I said, sometimes you sit on a board for free, knowing that he will also provide some value in your business organizations as well.
Thank you. Lilian Ocheng, I've seen your question. We do not have any funding or lines from World Bank to support our SMEs. So the money we lend to our customers, our depositors. I hope that answers your question. There's a question by one Amos Kithi regarding negotiating of contracts, and I think the question was to me whether we negotiate on interest. I want to respond in a very simple way. Yes, we do. Remember, the capping of interest rate was removed by our regulator, Central Bank. And so we are pricing each customer individually based on their risk profile, their levels of banking with us. And so the direct answer is yes, we do negotiate pricing on our facilities. Susan, have I left out any question that you need to respond to?
No, I think you have responded to almost all of them. Yes, just people saying thank you. This is good to know. You can come into a board with your expertise, and many people saying that they are grateful for their presentation.
Amos, please get in touch with on that number on the screen. I'll also get your contacts, then we can have some useful engagement. But in this, I mean, my number is 0724 174 824, 0724 174 824, 0724 174 824. Any of the customers on this call, my customers, feel free to reach out to me on the issue. I think without much ado, we've closed our session 13 minutes ahead of time. I want to thank everyone for being in time. I want to thank the panelists, Tyrus, for creating the scene for today's session. here to step out on other engagements. I want to thank my colleagues, the branch managers, our relationship managers, and there's a poll that is running, please, for sensitizing the customer to join in for this webinar. And basically, this underpins the value that we place on our business customers, which is driven by our three key corporate philosophies, which is our purpose. And our purpose is inspiring greatness for our customers, inspiring greatness for our employees, and also inspiring greatness for our shareholders. The second key corporate philosophy is our customer promise, which is we know you, we back you, and we wow you. And this is part of fulfilling that promise that we don't need to know your business, we want to back your businesses, and we want to wow you with solutions, which are not necessarily financial, but like what you've gone through this morning. And of course, this is supported by a very, very strong culture for NCBA, which we call the go-get culture. We want everyone to go for it. Go for your businesses, go for your employees, go for anything that is within reach, and we'll keep supporting your businesses to prosper. With those few and many remarks, I thank you all for being very participative, and I wish you a very successful day ahead. In case you don't meet on this channel, I look forward to us meeting in various face-to-face forums going forward. I look forward to us going back to there through our business trips into next year. And I look forward to us working together to grow your businesses together. Thank you, and I wish you Merry Christmas in advance. Thank you, Asante Sana. Thank you.